Welcome back to Stock Tricks with Nick. In today's video, I'll be sharing my favorite 10 trade ideas for the week by breaking down each stock's fundamental, group strength, fund ownership, and technical setup. Last week, the market put in a new low on Monday and then held a 4-day rally. Unfortunately, we didn't get the follow-through day on Friday, while the NASDAQ and S&P 500 both sold off towards the end of the day. With the indexes under their 50-day simple moving average and only a handful of stocks breaking out and holding these moves, this is not a time to get aggressive yet. I want to make it clear that the setups that I show today are just that. Quality setups. Without the market trending in the right direction, your probability on any trade will be lower. Personally, I'm only 15% invested at this time, with mixed results from last week, outside of the big winner in AEHR. I plan on staying cautious until we get a follow-through day and the market leaders continue their uptrend. With that disclaimer out, here are the 10 stock setups that we'll be covering today. If I share a setup that fits your criteria, please help me out by smashing the like button and subscribing to my channel for more trading content. Now let's get into the charts starting now. First, we have BILL. It's got a group strength rating of A-, being 41 out of 197 groups. Within that group, it is the second strongest on a relative strength basis out of 38 stocks and 8th strongest on a composite basis. It's got a composite rating of 70 and an accumulation rating of C. Both of those are a little bit low for my liking, but the relative strength rating is 97, and that's what I'm really looking at while the market's kind of in a correction right now. Doesn't have any earnings just yet, all negative numbers still. Sales are starting to accelerate. We have plus 31, plus 38, plus 45, and plus 86, but we still are not making a profit with BILL. Fund ownership has been increasing on the stock though. It went from 374 last September to 590 this September. The more funds moving into the stock, the more money that can push the stock higher. Jumping into the charts, we had this nice move up on earnings, plus 33%. This is a stock that I've tried to trade a couple times in here. We had this 2-day pivot. I bought that, sold some into strength, got stopped out when it pulled back. Same thing through this area, then it pulled back again. What I'm hoping with this is we finally frustrated enough traders. We pulled back, undercut many of the pullback's lows, and now we're actually starting to put in higher lows as the market makes lower lows, showing its relative strength. Friday, we had a pullback day, bounced at the 8-day exponential moving average, but did so on lower volume, which is a good sign. We want stocks to be pulling back on low volume, pushing out on heavier volume. Right now, it's in the middle part of this volume shelf, so good support where it's at, along with that 8-day exponential moving average. As for an entry point, I'll be looking for a break over Thursday and Friday's high, right around the same price. We'll go with Friday's high, 282.95 for BILL. Next, we have one from last week, CRC. It is in one of the hottest groups right now, oil and gas. It's the second strongest group out of 197. Within that group, it is 21st on a relative strength basis, and it has a relative strength rating of 97. So that's how you know just how strong this group is right now. So relative strength rating of 97. Within the group, it's middle of the pack on a composite rating, 24 out of 59. It's got an A+ at accumulation distribution rating, meaning high volume up days, low volume pullback days, composite rating of 94. Again, composite rating of 94, but it's still midway in that group. That's how strong the group has been recently. It had negative earnings 3 quarters ago, but the last 2 quarters were up 863% and then 123%. And sales are finally turning around, went from minus 40, minus 51, minus 37 to plus 10, while we have had positive after-tax profit margin increases of 3%, 28%, and 25%. Fund ownership on this has been increasing, went from 0 last September to 336 this September, which with increasing on each quarter there. CRC from the low in the base to the high had a 78% move up. That's that oil and gas group really taking off. It had this first pullback of only 10%. This is when we had it on the watch list last week, and you could see we undercut that on Wednesday. So we shook out all the people that were in on this flag here, shook everyone out. We did an undercut of the lows in the pullback, and now we reversed higher. We had a strong day on Thursday, and then looked like we were pushing higher on Friday, hit that 20-day simple moving average, and then closed near the low. So there is some resistance right through this area. So we'll be looking for a break over Friday's high of 41.33 as a possible buy point for an undercut of the lows and reverse higher for CRC. Next, we have FLYW. This one is very much a technical trade only. Does not have any positive earnings to be shared. Sales is up, plus 73, plus 50, plus 38, plus 56, but after-tax profit margin has been negative. So it's not a strong fundamental case. What I'm looking at this is really that relative strength rating of 92, Group strength rating B, kind of middle of the pack there, 68 out of 197. But within that group of 38 stocks, it is the 6th strongest relative strength and mid-pack of 20 out of 38 on the composite rated. Fund ownership did decline in September, so that's another yellow flag. Again, this is very much a technical setup only. Taking a look at the chart, you could see just how strong the stock has been recently, up 57%. This IPO this year had that nice consolidated period, then broke out with heavier volume, consolidated, another breakout, and now we've kind of drifted down to the right, had some consolidated candles down here, broke out, some sideways action, good move on Thursday, and then we continued in that upper wick on Friday. So while the market was down on Friday, this was still up 1%, again, showing that good relative strength. We have a 2-day pivot, both of the highs on Thursday and Friday, 49.49, 49.48. So call it a break over 49.50 as a possible buy point for FLYW. Next, we have HCC, and this is in the #1 strongest group out of the 197. It's in energy and coal, so it's an A+ group strength rating, obviously. Within the group, it's kind of on the back half of the group with relative strength, 9 out of 13, composite rated 8 out of 13, but it has a relative strength rating of 94. Again, that's just how strong the group has been recently. A lot of the stocks in this group are extended right now, so I wouldn't be too surprised if we see a minor pullback going into the week and then some consolidation and breakout in the second half of the week. But this is a chart that has been consolidating and something to watch. Let's check composite rating 82, accumulation distribution A-, nice to see that as well. Fund ownership on this has been declining, so that's a yellow flag. We want to see funds increasing, maybe with this most recent quarter, with the push on heavier volume, that is funds coming in, but we don't have that data just yet. All we know is funds have been leaving the stock as of now. Zooming out on this chart, you see a nice big cup, a strong pullback in the handle, a little bit deeper than you would like a 20% pullback. Usually 5-10% would be better, but from there we had a nice breakout on heavy volume, 30% up to the top there. And that was kind of the beginning of the week. And then in the second half of the week, Wednesday, Thursday, Friday, you can see we started to consolidate on lower volume. So if we can put in another couple consolidation candles to the right here, or if we even pull back and shake out the lows in the pullback here, or in the consolidated period here, allow that 8-day exponential moving average to catch up, that would only improve the setup going into the second half of the week. But for now, a break over Friday's high, 27.51, and then a stop under the low there would only be a 3% risk. That would be a low risk entry point. But again, if we could get that sideways action or just a pullback to shake out the lows, allow that 8-day exponential moving average to catch up, that would help the setup for HCC. Next, we have HUT, Hut 8 Mining Corp, which is a Bitcoin miner. So right now it's got a group strength rating of A, 20 out of 197 groups. Within that group, it's the second strongest stock out of 55 on a relative strength basis and a composite rating of 8 out of 55. Composite rating overall is 94, relative strength rating is 98. When you have two 90s there, it's definitely a stock to watch. Earnings per share was up over 1,000%, over 1,000%, 433. And then we did have a negative earnings this most recent quarter, which is a yellow flag. You can see a negative after-tax profit margin down 61%. Not sure what happened this most recent quarter, but right now it looks like the stock's making up for it with a strong move out into kind of this cup here. Checking fund ownership, that has been increasing last September 15 to 36 this September. So zooming out on the chart, you can see this giant cup, another kind of cup, call it a handle. That's pretty deep for a handle as well, down 33%. So I kind of call it a cup and a cup. This was a trade that I was looking at Friday, didn't take it, but we pulled back, bounced again, 2 days right on that 8-day exponential moving average. Same with these 2 days. So we could tell this stock is respecting its 8-day exponential moving average until it doesn't. So this was one, just a quick pullback buy, could have gone over Thursday's high, 1022. But this is showing good strength, up 6.2% while the market was down on Friday and pressing lower. So we're above the main part of the volume shelf. I would love for this to pull back and tighten up so we can use Friday's high, 1063 as a possible buy point. If it just kind of shoots higher or gaps higher, then you have Wednesday's high, 1102 to work with. But at that point, where do you put your stop? It's pretty loose, so you got to kind of use an arbitrary 5%, 7% stop, whatever you're comfortable with at this point. So as I'll always say, more tightening up will only improve the trade going into next week. As much work as I put into scanning for the best setups, it's possible that I missed a few along the way. So please help me out by commenting below your favorite trade ideas going into the week that I don't mention in this video. Thanks for your help, and let's get back to the charts. Next we have LC, Lending Club. It's got an A group strength rating, 20 out of 197. Within that group, it is number 1 on a relative strength basis and 21 on a composite rating. It's got a relative strength rating of 99, a composite rating of 87, a little bit on the low end, not terrible. Accumulation distribution of B+. It does not have any positive earnings, positive sales, positive after-tax margins until this most recent quarter in June, where it had 115% earnings per share growth, 416% sales growth, and 4% after-tax profit margin growth year over year. Fund ownership on this has been steadily increasing. We went from 208 last September to 328 this September. This is another stock that I've been trading a couple times after this gap up. We had this nice pivot through here, broke out. I bought the breakout. I actually got it in a little bit lower on this 2-day pivot, but it just shook me out while the market was weak, kind of put in this double bottom, ran along that 50-day simple moving average, and really got going on Thursday. Looked like it was just breaking out, but after that move up, it squatted. So this looks really bad. Thursday's candle looks kind of scary, right? You see a 6.7% squat from the high of the day to the closing price. Not ideal there. But the next day, we just close the gap and then shoot higher and close high in the range. So this is a stock that after some shaking out is showing good strength, got out on good volume, and has been a market leader in the past here. So this is something that we want to focus on. It depends on where we open up on Monday. Again, if we could get some more consolidation, pull back to that 20, 50, 8, all of those moving averages right there, pull back to the volume shelf, that would create a lower entry point. That would be a lower risk entry point as well. Until we get that, we just have to work with what we have. So a break over Friday's high, 30.93 is viable, or a break over Thursday's high, 31.74. Ideally, we do get some consolidation before testing those levels though for LC. Next, we have another cryptocurrency miner, MARA. This has got a group strength rating of A-. It's 35 out of 197 right now. Number 1 on a relative strength basis in that group with a relative strength rating of 99. Composite rating, 53 out of 112, so right in the middle there. It has a strong accumulation distribution rating of A, composite rating of 75 on the lower end. That's why that composite rating compared to the group is mediocre. Fund ownership on this has been exploding higher, just 13 funds last September to 242 this September. A lot of money soaking into this group. Earnings per share, the first 2 quarters negative, and then we had plus 825 and then back to negative earnings. So still trying to find its way to profitability right now. But again, what I'm really focusing on is that relative strength. 99 in a tough market, that's what's drawing me to the chart. So with MARA, we had a monster move at the end of 2020 into 2021. Let's measure that. 3,200%, 3,300%. Incredible move there. After that, in February, actually, no, that was March. March, April, May, pulled back 68%. Typically, that's more than I would like for a trade. Usually, stocks that pull back more than 50% really cause choppy trading, and we're kind of seeing that on the right side of the base here. We made a move up, what is this, 109% just to get pulled back again, 32%. So still kind of a little bit early for the stock to play out, but with cryptocurrency really kind of pushing higher while the market is pushing lower, this is one of the few stocks that are setting up with good relative strength. You could see last week, all green bars, meaning we closed higher than we opened, showing good strength while the market was open, especially on Friday, up 2.8% while the market was down 0.5%. That's great relative strength, good volume on the way out. Thursday's pullback day came on lower volume, which is a nice thing to see. Not many people trying to leave the stock that day. We just ran 30%, so a quick check back to this volume shelf to the 8-day exponential moving average would be ideal. And then with that check back, we might be able to get a lower entry point, but with what we're working with, a break over Friday's high, $39.98, call it $40 is a possible buy point for MARA. Next we have OLN, and I think this is my favorite setup going into next week. It's got a group strength rating of A. It's in chemicals and specialty, which is 31 out of 197 right now. Within that group, it's the 4th strongest relative strength on a relative strength basis out of 46 stocks, and 7th on a composite basis. It's got a composite rating of 89, a relative strength rating of 96, so almost that double 90 that we look for. Accumulation distribution on the lower end, B-. That's okay because this has been basing out since June. So we'll get to the charts in a second here. I want to cover earnings per share. We were negative the first 2 quarters, then plus 396% year over year, plus 386% year over year the last quarter. Sales have been accelerating, went from -9, plus 13, plus 35, plus 79, and after-tax profit margin also increasing. We went from -51, -2, plus 13, plus 16. So nice to see the stock really shifting towards profitability now. Fund ownership has been increasing. We went from 438 last September all the way to 620 this September. So money flowing into the stock. So zooming out on the chart, you can see why this is one of my favorite setups, if not my favorite setup going into the week. The stock had a 350% move from last September to this June here. From there, we go through a nice VCP setup, volatility contraction pattern. We have our first pullback of 22% from high to low. Our second pullback from high to low here, 15%. Our third pullback high to low, 7.8% with a nice shakeout day. Let's zoom in here. We get this nice shakeout under the lows in the pullback on Wednesday. So we have each of those pullbacks consolidating, and then take a look at volume on Friday. One of the lightest volume days in this entire base here, as it just pulled back to the 8-day exponential moving average, still above the main part of the volume shelf. This has a beautiful looking chart to it. A break over Thursday's high, 50.70, is a possible buy point and a nice entry on this VCP setup. Next, we have another return to the breakout watch list, Tesla, TSLA. It's got a group strength rating right now of B. It's 73rd out of 197. Within that group, it's the 5th strongest on a relative strength basis out of 28 stocks, and number 1 on a composite basis. Right now, it's got a relative strength rating of 85, only 85, just because it broke out so heavily just to start the year, and then from January, it kind of peaked, went through a basing period, and is now climbing the right side of the base. So that's why, compared to the beginning of the year, it hasn't been the strongest stock, but it has gone through a nice consolidation period. Its accumulation distribution rating recently has been an A-, composite rating 97. Very strong earnings per share growth, 105, 95, 304, 230. Very strong sales acceleration, 39%, 46%, 74, 98. And after-tax margin steadily increasing, 10%, 8%, 10%, 13%, increasing each quarter year after year, year over year. Fund ownership has been increasing as well. September last year, 1928 to 2918 this September. So like I mentioned, Tesla had that strong pullback at the beginning of the year, 40% pullback, which after the run that it had in 2020, let's measure this, 1450% run, a 40% pullback is in the cards. It's not the 70% like MARA, 40% is nice and consolidated. Obviously, you don't want to hold during that pullback. You could get out as it breaks like the 50-day simple moving average here. But now we've gone through that consolidated period. We're starting to push higher highs, higher lows as it bounces on each of the moving averages. First, we bounce at the 200-day, then we bounce on the 50-day, then we bounce on the 20-day, and now it looks like we're consolidating right on the 8-day exponential moving average. During a very tough time in the market, this has trended higher, which is showing great relative strength recently. On Friday, we pulled back, bounced at the 8-day, closed just above that, did so on lighter volume compared to the rest of the week. With this, if we can break over Friday's high, that could be an entry point, 796. I would be waiting for a break over Thursday's high, 805. Then you're in that $800 range too. It's got a psychological barrier of around 100 number at 800 there. So break over Thursday's high, 805 is a possible buy point for TSLA, Tesla. And finally, we have Upstart, UPST, the market leader of 2021. This has got a group strength rating of A+. It's the third strongest group out of 197. And within that group of 31 stocks, it's number 1 in composite rating and number 1 in relative strength rating. It's got a relative strength rating of 99, a composite rating of 99, and an accumulation distribution rating of A. Really checking all the boxes. That's why I put it as a stock to watch last week as well. This most recent earnings, over 1,000% earnings per share growth, over 1,000% sales growth, and then 30% after-tax profit margin year over year. Fund ownership on Upstart has been steadily increasing, went from 53 last December, it IPO'd this year, up to 261 in this September. Taking a look at the chart, it had this nice strong move up, 250% from the low in the base, had earnings right here, stellar earnings, post-earnings drift higher, broke out, consolidated, broke out, and now with the market in some trouble, this pulled back 19%, so it does qualify for the high tide flag, which is a stock that moves up 90% or more in 8 weeks or less, and then pulls back within 25% of the high, which it meets both of that criteria. Since that pullback, it did bounce, and I do own this stock already, looking to buy more if we see a breakout, but something to watch. Had a nice move up at the middle part of last week, pulled back on Thursday, and then consolidated just above the 8-day and 20-day simple moving averages on Friday. Was up 1.25% while the market was down 0.5%, good sign of daily relative strength. This might need a couple days more to really consolidate it, maybe shake out the lows, shake out the 20-day moving average, and just flag out on this downtrend line through here. So if we can get a break, a break over the downtrend line would be also a break over Friday's high, so you have a confluence of indicators there. So a break 316.17 is a possible buy point. Or if you want to be a little bit more cautious, you could wait for a break over 323.59, a high from Thursday for Upstart UPST. All right, that's going to be the breakout watch list for the upcoming week. If you enjoyed the video, smash the like button and subscribe to my channel, where I make these watch list videos every Sunday, go live on Tuesday nights to break down any stocks that you want me to look at, and make other personal finance themed videos. Have a great week, and I'll see you Tuesday.